Hello, today is Tuesday, the 19th of February, 2008, and this is Brian Shannon from Alpha Trends speaking. The market's closed, and the S&P 500 finished with a gain of 6 cents today. But the closing figures didn't come anywhere close to telling the real story here, as we had a large gap opening higher this morning, and as is often the case in a bear market, those opening gaps are a lot of times met with resistance and fail. And it came up, it was unable to make a higher high from last week, and this is the level of resistance near 137.20 that I had suggested we keep an eye on, because if breaking above this level here at 137.20 occurs, and it can hold above there for more than a couple hours, then it might put this market in for another test of the 140 level, where it would also find the potential for resistance near the declining 50-day moving average as well. Altogether, really just the market action, again, the closing figures didn't tell what really happened here, because as we saw, the gap higher was initially met with some selling, and the market looked like it was maybe going to try and cover about midday New York time, and about 1 o'clock, that is. We saw here that it was able to rally back above the VWAP for the day, but late in the day, the sellers came back in and pushed this market down quite hard, and we finished right near the lows of the day. Although we, towards the end, last couple of minutes, we did see a little bit of buying come in and turn that market back to positive. And now my screen is showing the S&P 500 down a penny. So pretty much, really a bad day for the markets, as we continue to see that they are tracing out this symmetrical triangle. And again, a symmetrical triangle is a continuation pattern, and that means that it's typically resolved in the direction of the primary trend. The primary trend is clearly lower here, so you have to continue to treat this market very suspiciously here. When we look at the 10-minute time frame, again, the level that we were going to look at for potential support, again, was this 134 level. And if the market breaks below that 34 level, it puts 132 in jeopardy, and 132, as we know from last week, is a larger point of support that really, we're in danger now of breaking this little ascending trend line right here that connects these lows that are forming this symmetrical triangle. Breaking that, I think you've got a quick move down towards 132. And if the 132 level fails to hold, then most likely we're heading for a low, a test of the lows, that is. I got some emails saying, hey, I sounded a little bearish on Friday. We're in a bear market, and I try to maintain the objectivity, but it seems as though the sellers are getting a little bit more aggressive here, or maybe the buyers are just losing conviction, and we've got to continue to be very careful in this environment. If the market gets above 137.20, then that breakdown scenario becomes maybe pushed to the side, and it'll take more time for that to develop. But breaking 137.20 kind of turns it a little bit more neutral, and then maybe we can get a test of that 140 level. But again, because the path of least resistance is lower, the odds do not favor that type of turnaround. The odds favor further trending action, which is obviously, again, in a downtrend, regardless really of any time frame you look at. That we can find evidence of the downtrend on the monthly time frame, weekly, daily, 30-minute, 5-minute. You can see that it's breaking below the average price of the last 5 days. The 2-minute, and that's where the market tried to find a little bit of support, was near the 2-day VWAP, but realistically that's only for very short-term traders. And again, the daily action was obviously something that the sellers had control of throughout the day. The SMH is also forming one of these symmetrical triangles, kind of breaking through the low point of that, and or the midpoint of that, rather. And as we were mentioning on Friday, 2850 is a level that looked like if that level was to be broken, then perhaps we're going to get a test of the 27.5 area, and we'll come down and put this trend line in jeopardy as well, which breaking would theoretically put us in the position of having completed this symmetrical triangle to the downside, and that will give us a price objective down near about $25 a share. So as bad as the sell-off has been in these semiconductors, there's nothing here at all that would indicate that it makes sense to buy these things. Don't look at PE, forget about valuations. All that stuff just doesn't matter in a bear market. When there's sellers in the market, forget about valuations, because logic and reason go out the window, and trading becomes more focused on emotions than the logic that you might be used to applying to a market. The Russell 2000 is also tracing out this symmetrical triangle, and this is the trend line that we've been observing for the last week and a half or so. And right now, it's in jeopardy of breaking at about 69.5. Below that, we have the potential for support at about 67.5. So maybe we'll get a break of that and a quick two points drop. But it's just, again, it's looking like if this little symmetrical triangle fails, the height of this pattern, again, is equal to about a movement down towards the 64 level, which would make sense. If we get that lower low, maybe we'll get a nice panic flush out that could start to build the base for a turnaround, but it's still way too early to consider the possibility that this market is going to make a more significant turnaround. We need that 50-day moving average to flatten out. We need this market to get it back above 73. We need that 200-day moving average to flatten out. There's still a lot of risk in this market. The two forms of risk in trading are price. We're getting that. People are realizing the risk of price once again. The other form of risk is time. If they don't scare you out on the way down, what typically happens is that they'll wear you out as the market vacillates back and forth without any upside progress, and people realize that it's not an immediate recovery that typically comes. So when we look at the 10-minute time frame here, you can see that even on this, you can see this shoulder, head, and then maybe another shoulder there, but that's within the context of this bigger picture where we're seeing this symmetrical triangle form. So we've got one bearish pattern inside of another bearish pattern, and obviously in a bear market, you've got to take that very seriously and consider that the most likely scenario here is for further breakdown in prices. The path of least resistance is lower, and odds favor further downside. The NASDAQ 100 continues to be one of the weaker groups. It's the it's got the declining 5-day moving average in here again. We've been looking at this 43.50 level, and breaks of support, important levels of support, typically don't reward the first short sellers in there when they come from such a sudden and sharp move. That is, we saw this market already drop from 44.30. It dropped 80 cents down towards that level. Dropped about 2% down towards that support, level that we were looking as for potential support to break. It did break initially, trapped some shorts in there. And on Friday, what I said was, odds favor further downside. What I was looking for was hopefully or maybe rather a test of this 5-day moving average, which again is now turning lower. So that puts the odds of a larger breakdown more immediate now, I think, than what we've been seeing. And maybe we get a rally up towards 44 now. This little level of support that formed during the day today is a likely area that if the market rallies up to that level, that perhaps it will find some more selling pressure, and then the next breakdown will lead to pretty much maybe the fatal break for this market that puts this uptrend line in jeopardy down near 42.75, and if that fails, then it looks like we're most likely heading for lower lows. If we take a measurement of this symmetrical triangle, we take a conservative measurement in here, and this low would be 42. This high up here would be about, let's just call it 45.5 to be conservative. So 3.5 points. Take that from the breakdown point here at about 43. And that will give us a target near about $40.50. So there's a lot of reasons to still be very concerned about this market. And if, for instance, the IWM fails to hold this this trend line here, a great way to trade would be to purchase the TWM, which is the double inverse ETF that represents the Russell 2000. So moving above $84, or even just above this trend line near 83, above 84 gives us the higher high that would really confirm the weakness. And when you look at the daily time frame for the TWM, breaking. That's breaking this little trend line here. We see the 10-day moving average is about to cross back up through the 20. It's been finding support at the 50-day moving average, and the measurement in here, real quickly, if we took the height of this, add it to the breakout point, we'd be looking at about $95 a share. So consider these double inverse ETFs, and they're a great way to get overall exposure to weakness in the overall market by going long and finding leverage. So here's that now inverted head and shoulders pattern that we saw on the IWM. So a lot of reasons to still be careful.